Tom Lee just dropped a bold call on CNBC saying, "Financials are the next big trade, with even bigger upside than AI." That's a huge statement, especially when most of Wall Street is laser-focused on artificial intelligence stocks right now. For those who don't know, Tom Lee is the head of research and chief investment officer at Fundstrat Capital, and he's one of the most closely followed market strategists out there. In this interview, he shared his thoughts on Nvidia, the hype surrounding AI, and why he believes the next major leg of this rally could actually come from financial stocks instead of tech. In today's video, I'm going to show you the clip of Tom Lee's CNBC interview. Then I'll break it down with my own reaction and analysis, so you can understand exactly what it means for your investments. And after that, I'll give you my in-depth breakdown of 3 phenomenal AI stocks to buy right now that I believe are still poised for massive upside in this market. If you only watch one video today, this is the one, so make sure you stick around until the very end. And before we dive in, do me a favor, smash that like button. Let's get this video to 1,000 likes. Share it with a friend who's into investing, and drop your thoughts in the comments below. Don't forget to subscribe so you don't miss my next big financial investing update. Alright, let's roll the clip and hear exactly what Tom Lee had to say.
He's bullish, as you know. He is Fundstrat's Tom Lee. Joins us now at Post 9. It's good to see you.
Great to see you, Scott.
Nvidia looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I know investors are really anxious, and Nvidia has not performed well the last few times it's reported. But the story arc there remains that is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think Nvidia still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? From Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few.
Yes.
And then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
That's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's bigger upside in the owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it helps. It provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
They're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally.
Yes.
Right? I mean, industrials,
Correct.
the biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I mean, I think even this quarter, right, the numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financial.
So let's start with the big theme. Tom Lee is still bullish. No surprise there, he's known for his optimistic calls. But he really laid out why he thinks this rally still has legs. The conversation kicked off with a question about Nvidia. And as you know, Nvidia has become almost the poster child for the AI trade. Investors have been nervous because the stock hasn't always reacted well after earnings, even when the numbers were strong. But Tom's point here was pretty clear. Nvidia is still right at the center of one of the biggest structural changes in the global economy, which is artificial intelligence. So even if the stock dips on earnings, it doesn't shake his overall thesis. Now that takes us into the second big theme, AI anxiety. The interviewer brought up this idea that maybe the hype is peaking. Sam Altman has said investors might be overeager. Meta is reorganizing. There are reports that some generative AI models are already hitting roadblocks. So the question was, are we seeing cracks in the AI story? Tom's answer was really interesting. He said it's not about AI slowing down, it's about people trying to figure out where we are in the cycle. Are we in the first inning of AI, or are we already late in the game? His view is that it's still early innings. Why? Because there are only a handful of public stocks you can actually buy that give you exposure to AI directly. That scarcity has funneled a massive amount of capital into just a few names, and that's why prices have surged so much. Of course, that raises the risk of bubble-like behavior. When money crowds into a small group of stocks, valuations can get stretched. But Tom argues that as more AI-focused companies go public, and he expects a wave of IPOs over the next 12 months, investors will have more options. If those IPOs show solid growth and perform well, that actually proves we're still early in the cycle rather than at the peak. So in his eyes, AI is not a bubble bursting, but a trade that still has plenty of runway ahead. Then he made a really important pivot. Even though AI is still his favorite trade, he actually sees even bigger upside right now in financial stocks. And this is where his argument gets fascinating. He points out that financials are what he calls second-order beneficiaries of AI. In other words, they may not be building the chips or training the models, but banks like JP Morgan and Goldman Sachs are already integrating AI into their operations. And beyond that, regulators are now giving them more room to experiment with blockchain technology. If that plays out, it could fundamentally change their business models, make them more profitable, and even lead to higher valuation multiples, closer to what we usually see in tech stocks rather than in traditional banks. Now, of course, the big question is, what about interest rates? The Fed has been the dominant force behind stock market moves over the past 2 years, so does the rate picture matter for banks? Tom acknowledges that rates do play a role since lower rates provide liquidity for housing and corporate lending, which helps spreads narrow. But his bigger point is that banks have shown visible earnings growth across different cycles. They may be treated by the market as cyclical stocks, but in reality, their growth and profitability make a strong case for a re-rating. And in his words, JP Morgan and Goldman could actually deserve tech-like multiples. That ties into the broader market rally we've been seeing. Tom noted that once the talk of rate cuts started, the rally expanded beyond just mega-cap tech. Industrials, financials, and the biggest names in each sector started leading the charge. And he expects that broadening trend to continue. His reasoning, at the end of the day, finance touches every part of the economy. For every unit of GDP growth, there's a financial component attached to it. So while financials aren't half the stock market index, they do represent nearly half of the economy, which means they're underrepresented in terms of market weighting. That mismatch, according to Tom, leaves a lot of room for upside. So to wrap it all up, Tom Lee's message is clear. Yes, AI is still the most important trade, and Nvidia remains central to that story. But the bigger surprise in this interview was how strongly he emphasized financials as the next big driver of the market over the next 12 to 24 months. He sees banks not only benefiting from AI and blockchain, but also poised to re-rate closer to tech valuations. And that's huge, because if investors start viewing JP Morgan or Goldman in the same light as some of the big tech names, that could completely change the leadership dynamic of the market rally. Overall, Tom remains bullish. No matter the short-term volatility, he believes we're still early in this cycle, and both AI and financials are the trades to watch going forward. Let's start with Nvidia, ticker NVDA, the undisputed backbone of the AI ecosystem, and a company that has become synonymous with the rise of artificial intelligence. Over the past decade, Nvidia has transformed itself from a graphics card manufacturer for gamers into the most critical supplier of hardware for the AI revolution. Its journey is nothing short of remarkable, and today, Nvidia stands at the very heart of the technological transformation sweeping across industries worldwide. Nvidia's GPUs, or graphics processing units, are no longer just about rendering video game graphics. They have become the essential engines powering the massive computing workloads that artificial intelligence demands. These chips are designed to handle thousands of simultaneous calculations, making them perfect for training and running complex AI models that are shaping the future of technology. In fact, companies building cutting-edge AI tools and services need thousands, sometimes tens of thousands, of Nvidia's GPUs to train their models. This has created an unprecedented surge in demand, with data centers around the world racing to secure as many Nvidia chips as possible. The scale of this demand is unlike anything the tech industry has seen before, and it has put Nvidia in a league of its own. The financial results speak for themselves. Nvidia's data center revenue has skyrocketed by an astonishing 409% year-over-year, a figure that would be unthinkable for most companies. This explosive growth is a direct result of the AI boom, as organizations from startups to tech giants pour money into building the infrastructure needed for the next generation of intelligent applications. At the center of this frenzy are Nvidia's H100 GPUs, which have quickly become some of the most sought-after pieces of technology on the planet. These chips are the gold standard for AI workloads, offering unmatched performance and efficiency. For many companies, getting access to H100s is a make-or-break factor in their ability to compete in the AI space. Unsurprisingly, Nvidia's stock price has reflected this powerful market position. Investors have flocked to the company, driving its valuation to record highs. The market recognizes Nvidia's technological lead and its central role in the AI revolution, making it one of the most valuable companies in the world today. But Nvidia isn't resting on its laurels. The company is constantly pushing the boundaries of what's possible, with new chips like the H200 and B100 on the horizon. These next-generation GPUs promise even greater performance, efficiency, and capabilities, ensuring that Nvidia stays ahead of the competition and continues to set the pace for the entire industry. This relentless innovation is fueled by massive investments in research and development. Nvidia pours billions of dollars into R&D every year, assembling some of the brightest minds in engineering, computer science, and AI. Their state-of-the-art labs are where tomorrow's breakthroughs are born, and this commitment to innovation is a key reason why Nvidia maintains its supremacy. The impact of Nvidia's hardware extends far beyond the tech sector. Its chips are powering the AI revolution across a wide range of industries, from manufacturing and healthcare to autonomous vehicles and robotics. In factories, Nvidia-powered robots are streamlining production. In hospitals, their GPUs are accelerating medical research and diagnostics. And on the roads, Nvidia's technology is at the core of self-driving cars, making the future of transportation safer and smarter. With such a broad and deep impact, it's no wonder that analysts believe Nvidia's valuation is justified. The company's hypergrowth is not just a flash in the pan, it's the result of a fundamental technological shift. As AI becomes more deeply embedded in every aspect of our lives, Nvidia's role as the foundational hardware provider only becomes more critical. At the helm of this extraordinary company is CEO Jensen Huang, whose visionary leadership has been nothing short of pivotal. Huang's ability to anticipate industry trends, make bold bets, and inspire his team has transformed Nvidia from a niche player into a global powerhouse. His charismatic presence and relentless drive have made him one of the most respected leaders in technology. One of Nvidia's most powerful advantages is its CUDA platform, a proprietary software ecosystem that allows developers to harness the full power of Nvidia GPUs. CUDA has become the industry standard for AI and high-performance computing, creating a sticky ecosystem that keeps developers and companies coming back to Nvidia for their most demanding projects. This combination of a robust software moat and unmatched hardware dominance makes Nvidia a truly compelling company. It's not just about having the best chips, it's about building an entire ecosystem that supports innovation, collaboration, and growth. This holistic approach is what sets Nvidia apart from its competitors and cements its leadership in the AI era. In many ways, Nvidia has become the essential infrastructure provider for the AI age. Just as oil powered the Industrial Revolution, Nvidia's GPUs are powering the digital revolution, serving as the backbone for data centers, cloud computing, and every major AI initiative around the globe. Of course, no investment is without risks. The technology landscape is always evolving and competition is fierce. But the potential upside for Nvidia is enormous, given its entrenched position and the explosive growth of AI. For investors, the risk-reward profile is incredibly attractive, especially for those who believe in the long-term potential of artificial intelligence. Nvidia's operational excellence further strengthens its appeal. The company has demonstrated an ability to scale production, manage supply chains, and deliver products on time, even in the face of global chip shortages. This reliability gives investors and customers alike a high degree of confidence in Nvidia's ability to execute on its ambitious vision. Time and again, Nvidia has delivered results that exceed even the loftiest expectations. Its earnings reports are closely watched events, often setting the tone for the entire tech sector. The company's consistent outperformance is a testament to its strong management, innovative culture, and relentless focus on execution. With a near monopoly on the most advanced AI components, Nvidia has become a must-own stock for anyone looking to invest in the future of technology. Its dominance in both hardware and software creates formidable barriers to entry for competitors, ensuring that Nvidia remains at the top of the AI food chain. In many ways, Nvidia is the purest play on AI hardware, with a secure and enviable position at the very top of the technology hierarchy. Its chips are the gold standard, its software is indispensable, and its brand is synonymous with innovation and excellence. Nvidia continues to stand out as one of the most powerful players in the AI space, commanding a massive market cap of $4.44 trillion. In 2024, the company reported $130.5 billion in revenue and an impressive $72.88 billion in net income, with earnings per share coming in at 3.14. The stock currently trades at a price-to-earnings ratio of 57.89, showing just how much investors are willing to pay for future growth. What's driving the excitement right now is the launch of the Blackwell Ultra, Nvidia's newest product, designed to push AI hardware capabilities even further. This innovation is expected to strengthen Nvidia's leadership in AI and potentially drive another wave of growth. On top of that, CEO Jensen Huang has been widely recognized as the godfather of AI, which not only reflects his vision but also cements Nvidia's prestige as a must-watch company in the AI revolution. The stock has strong momentum, but all eyes will be on the next earnings report, which could either reinforce investor confidence or trigger volatility depending on how results measure up to expectations. For investors seeking exposure to the foundational layer of the AI revolution, Nvidia is not just an option, it's essential. Its products are the building blocks upon which the future of artificial intelligence is being constructed, and its influence will only grow as AI becomes more pervasive. As we look ahead, Nvidia's future appears incredibly bright. With its relentless innovation, visionary leadership, and dominant market position, Nvidia is a name that no one in technology or investing can afford to ignore. The company is not just riding the AI wave, it is creating it, and its journey is only just beginning. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next, we have Alphabet, ticker GOOG, a company that has become synonymous with innovation, scale, and the relentless pursuit of technological advancement. As the parent company of Google, Alphabet stands at the very heart of the digital world, shaping how billions of people access information, communicate, and interact with technology every single day. It's often called the king of data and search, and for good reason. Google Search alone processes over 8.5 billion queries every day, making it the world's largest gateway to information. This dominance in search is not just about convenience, it's about data and lots of it. Alphabet's AI advantage lies in its vast, ever-growing data collection. Every search, every click, every interaction across its platforms feeds into a massive reservoir of information, fueling the development of smarter, more capable AI systems. This dataset is absolutely crucial for training advanced AI models like Gemini, Alphabet's next-generation large language model. The sheer scale and diversity of Alphabet's data give it a unique edge, allowing its AI to learn from real-world scenarios at a level few can match. Alphabet doesn't just build AI for the sake of it. The company integrates artificial intelligence into its core products, such as Google Search, Google Maps, and Google Photos, making these tools smarter, faster, and more intuitive for users worldwide. Even Google Cloud, its enterprise arm, is infused with AI capabilities. Google Cloud offers businesses a powerful suite of AI tools and infrastructure, enabling companies of all sizes to harness the power of machine learning, data analytics, and automation. From startups to Fortune 500s, organizations rely on Google Cloud to drive digital transformation and unlock new opportunities. But Alphabet's ambitions go far beyond search and cloud. Waymo, its self-driving unit, represents a bold, long-term bet on the future of transportation. Waymo's autonomous vehicles are powered by some of the most advanced AI systems in the world, learning to navigate complex city streets and highways with increasing confidence. AI is rapidly becoming the core of Alphabet's identity, driving innovation across every division. From healthcare to quantum computing, Alphabet's research labs are pushing the boundaries of what's possible, with artificial intelligence as the common thread tying it all together. Alphabet's financial strength is a key enabler of its AI ambitions. With over $100 billion in cash reserves and robust, consistent revenue streams, the company can afford to invest heavily in research, talent, and infrastructure, often outspending its rivals by a wide margin. Despite its dominance, Alphabet's valuation remains attractive compared to other tech giants. Investors see it as a company with both stability and significant upside, especially as AI becomes a larger part of its business model. What truly sets Alphabet apart is its unmatched synergy in data, research, and cloud computing. The company's ability to combine massive datasets, world-class research talent, and scalable cloud infrastructure creates a virtuous cycle of innovation that's hard for competitors to replicate. The successful launch of Gemini, Alphabet's flagship AI model, has renewed confidence in the company's ability to lead in artificial intelligence. Gemini is already being integrated into products like Google Workspace, Search, and Android, making AI accessible to billions. Thanks to Alphabet's massive scale, new AI features can be rolled out to users at lightning speed. Whether it's smarter email suggestions, real-time language translation, or advanced photo editing, Alphabet's AI innovations reach people everywhere almost instantly. YouTube, another Alphabet powerhouse, uses AI to personalize recommendations, optimize video delivery, and target ads with incredible precision. This not only enhances the user experience but also drives significant revenue growth for the company. Across its ecosystem, Alphabet's AI integration is making technology more helpful, accessible, and enjoyable. From Google Assistant's voice recognition to real-time traffic updates and maps, AI is quietly improving daily life for billions. The investment thesis is clear. Alphabet is a dominant tech company leveraging AI to strengthen its core businesses, enter new markets, and create entirely new categories of products and services. Years of long-term AI investments are now bearing fruit. Alphabet's research in areas like natural language processing, computer vision, and robotics is setting industry standards and opening up new frontiers. Under the leadership of Sundar Pichai, Alphabet has doubled down on its AI-first strategy. Pichai's vision is to make AI not just a feature, but the foundation of every product and service the company offers. As a diversified blue-chip investment, Alphabet offers exposure to a wide range of high-growth sectors, from digital advertising and cloud computing to autonomous vehicles and life sciences. Alphabet, with a market cap of $2.52 trillion, has also been delivering strong financial performance. In 2024, the company reported $350.02 billion in revenue and $100.12 billion in net income, with earnings per share at 9.48 and a price-to-earnings ratio of 21.85. A big driver of growth has been Google Cloud and the core search business, both benefiting from AI integration. Profitability in Google Cloud has been accelerating, and that strength has pushed the stock to an all-time high of $209.23, a level that signals strong investor confidence. Analysts still see upside potential, especially with ETFs increasingly exposed to Alphabet. Despite ongoing antitrust challenges, Alphabet is trading at a discount compared to some of its peers, creating opportunities for investors who believe in its long-term story. The company is also making moves strategically, like the $10 billion cloud partnership with Meta, which is expected to boost its competitive position even further. Still, challenges remain. Regulatory pressures continue to surface, including a fine from a Russian court for not complying with local rules, and a $30 million settlement tied to data collection from minors. Even with these issues, Alphabet's fundamentals remain solid, its investments in AI infrastructure are growing, and analysts remain optimistic about long-term free cash flow and market expansion. For investors, Alphabet provides a unique opportunity to benefit from both the application layer of AI, where products touch billions of users, and the underlying cloud infrastructure that powers the next wave of innovation. In short, Alphabet is a core holding for any AI-focused portfolio, offering stability, growth, and a front-row seat to the future of artificial intelligence. In recent years, Meta Platforms' ticker symbol Meta, formerly known as Facebook, has undergone one of the most significant strategic shifts in its history. Once laser-focused on building the metaverse, Meta has now made a massive pivot toward artificial intelligence, signaling a new era for the social media giant and the broader tech industry. This move is not just a change in direction, it's a bold bet on the future of technology and how people will interact online. Mark Zuckerberg, Meta's visionary CEO, has redirected the company's energy and resources from the ambitious but uncertain metaverse project to the rapidly evolving world of AI. This shift reflects both the challenges of building a virtual world and the explosive potential of artificial intelligence to transform Meta's core products and services. To support this transformation, Meta is investing billions of dollars in cutting-edge AI infrastructure. The company has become one of Nvidia's largest customers, purchasing thousands of high-performance GPUs to power its AI research and applications. These investments are laying the groundwork for Meta to compete with other tech giants in the AI arms race. AI is already making a tangible impact on Meta's platforms. Facebook and Instagram now use advanced AI algorithms to personalize content, improve recommendation engines, and keep users engaged for longer periods. These enhancements not only make the user experience more enjoyable but also drive higher engagement and ad revenue. The results are clear. Meta's investment in AI is directly boosting its revenue growth. By leveraging AI to optimize ad targeting and content delivery, Meta is able to extract more value from its massive user base, making its business model even more robust and profitable. One of Meta's most strategic moves has been the development and open sourcing of its Llama AI model. Unlike many competitors who keep their AI models proprietary, Meta has chosen to share Llama with the world, inviting developers and researchers to build on top of its technology. By open sourcing Llama, Meta is accelerating innovation and fostering a vibrant ecosystem around its AI tools. This approach not only speeds up technological progress, but also positions Meta as a leader in the open AI community, attracting top talent and partners from around the globe. Meta is also integrating AI into its most popular messaging platforms, including WhatsApp, Messenger, and Instagram. These integrations enable smarter chatbots, improved content moderation, and new features that enhance communication for billions of users worldwide. Thanks to its massive global reach, Meta has a unique distribution advantage. The company can roll out new AI-powered features to billions of users almost instantly, giving it a significant edge over smaller competitors and allowing it to shape the future of digital interaction at an unprecedented scale. Financially, Meta has emerged from recent challenges leaner and more profitable than ever. Cost-cutting measures and a renewed focus on core business areas have strengthened its balance sheet, providing ample resources to fund its ambitious AI initiatives. The company's core advertising business remains a powerhouse, generating the cash flow needed to support its AI ambitions. As AI improves ad targeting and measurement, advertisers are seeing better returns, further reinforcing Meta's dominant position in digital marketing. Despite its rapid growth and transformation, Meta's valuation remains attractive to investors. The market is beginning to recognize the company's potential as an AI leader, but there is still significant upside as its AI strategy unfolds. If Meta's Llama model succeeds in becoming the foundation for countless AI applications, the company could play a role in AI similar to what Android did for mobile, providing the backbone for an entire ecosystem and capturing enormous value in the process. Meta's AI is also adapting to a world with increasing privacy regulations. By developing smarter, privacy-conscious ad targeting systems, Meta is staying ahead of regulatory changes and maintaining its competitive edge in digital advertising. As a result of these strategic moves, market sentiment around Meta has shifted dramatically. What was once seen as a company struggling to find its next act is now viewed as a tech leader with a clear vision and strong execution. Today, Meta stands as a cash-generating machine with a strategic AI play that could define the next decade of technology. Its ability to innovate, scale, and monetize AI puts it in a league of its own among tech giants. With a massive user base, relentless investment in AI, and a commitment to open-source innovation, Meta is positioning itself as one of the top AI stocks to watch. Its influence extends from consumers to developers, shaping the future of how we connect, communicate, and create online. Meta Platforms is making bold moves in the AI race with a market cap of $1.9 trillion. The company reported $164.5 billion in revenue in 2024, along with net income of $62.36 billion and earnings per share of 28.29. The stock trades at a price-to-earnings ratio of 26.66. One of the biggest developments for Meta is its plan to invest $50 billion in a new AI data center in Louisiana, a project announced by President Donald Trump. This investment underscores Meta's serious push into AI infrastructure. Financially, Meta is delivering strong results with a 21% year-over-year increase in ad revenue, totaling $46.6 billion in the second quarter of fiscal 2025. AI has played a big role in boosting ad relevance and conversions across Instagram and Facebook, which continues to power growth. The stock recently pulled back from a peak of $797 to about $740, a move that mirrors broader market weakness and some concerns about risks tied to AI. Still, analysts remain confident, projecting revenue of $49.2 billion in the next quarter, another 21% increase year over year. That would push annual revenue close to $195 billion. On the financial health side, Meta's profit margin sits at an impressive 42.96%, with return on equity at 34.14%, and the company even pays a $2.05 dividend. Altogether, Meta remains strong both operationally and financially, with heavy investment in AI positioning it well for the future. The key challenge will be managing stock price volatility and competition, but the company's focus on AI and infrastructure suggests it has a solid runway ahead. As Meta continues to evolve, its future looks incredibly bright. The company's bold AI pivot is not just a response to industry trends, it's a proactive strategy that could redefine the digital landscape for years to come. Nvidia, Alphabet, and Meta are titans in the AI landscape. They represent the core of the AI revolution with unique strategies. The potential is massive, but research is key. This isn't about hype, it's about quality companies with sustainable growth. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. For exclusive stock tips and analysis, join the Stocks Galore Patreon. Which AI giant are you most bullish on? Share in the comments. Like, share, and subscribe for more financial insights. Thanks for watching.